What's going on, everyone? Welcome back to the channel. Here we talk about money, discipline, and the habits that determine whether someone builds financial freedom or spends their entire life living paycheck to paycheck. Today, I want to talk about investing, and more specifically, the first investment most people should make when they are starting out. One of the biggest mistakes people make when they first think about investing is assuming that it's something complicated that only experts understand. When people hear the word investing, they imagine stock charts, financial news, and people staring at numbers all day trying to guess which company will go up or down next. Because of that image, many people convince themselves that they should wait until they know more before they begin. The problem is that the longer someone waits to start investing, the more they lose the single most important advantage in finance, and that advantage is time. Time is what allows money to grow slowly and steadily over many years, and once time is gone, there's no way to get it back. So instead of investing, most people save money in their bank account because it feels safer. Saving is good, but when money sits in a bank account for years, it usually isn't growing fast enough to keep up with inflation. Prices rise over time, which means the same money slowly loses purchasing power. That's why investing matters. Investing allows your money to grow instead of slowly losing value. The interesting part is that the first investment most people should make is not exciting or complicated. In fact, it is very simple. It is something called an index fund. An index fund is a collection of hundreds of companies grouped together into a single investment. Instead of trying to guess which one company will perform the best, an index fund spreads your investment across many companies at once. That means you are investing in the growth of the overall market instead of betting everything on one business. Over long periods of time, economies grow, businesses expand, and the market tends to rise along with them. By investing in an index fund, your money participates in that growth instead of sitting on the sidelines. But the real power of investing is not picking the perfect investment. The real power is consistency and time. When someone invests regularly over a long period, their money begins to grow, and the growth itself starts generating even more growth. This process is called compounding. Compounding is when your money earns returns, and those returns start producing their own returns. Over time, the effect becomes stronger and stronger because the growth builds on itself year after year. That is why people who start investing earlier often have a huge advantage. It is not necessarily because they invest more money, but because their money simply has more time to grow. And if you want to understand investing a little deeper in a simple way, I actually put together a free PDF that explains the basics of investing step by step, including index funds and how beginners can start investing with small amounts of money. If you're interested, you can download it using the link in the description. So if you're wondering where to begin with investing, the answer is usually simpler than people expect. Start with something simple, invest consistently, and give your money time to grow. Because in investing, the biggest advantage doesn't belong to the person who predicts everything perfectly. The biggest advantage belongs to the person who simply started earlier and stayed consistent. Before you go, I'm curious about something. What do you think stops most people from investing earlier? Lack of money, lack of knowledge, or fear of losing money? Let me know in the comments. And if you found this helpful, consider subscribing. I post short lessons like this every week about money, discipline, and financial freedom. I'll see you in the next video.